Hello, this is Vance, and this is Monday, September the 14th, 2015. And what I'm going to do today is I'm going to give viewers of YouTube channel on an intro on the slow hand method for price action. Now, it's been some time since I've gone through this. It's really about the basics, kind of like the overall philosophy. I got some slides here, got a couple of examples, and I wrote some things on today's chart for the CL. And so, by way of introduction, I figured this would probably be the easiest way because I haven't been around for a while, and I figured, okay, I'll go through this. Hopefully, you'll make some sense out of it. How I proceed with trading, my philosophy, my approach, what the slow hand method developed out of, that sort of thing. And hopefully, as we go through this, you'll get a good overview or idea of what it is that I'm doing with regards to this. So, let's try to do that, and we'll go from there. If you have any questions and so forth, you can kind of make comments afterwards. So the way. Okay. So let's start. So, slow hand method. What exactly is it? Well, what I'm going to do is that I use a chart. Well, maybe I should just kind of back up a second. I use exclusively the 800 tick chart for trading the CL. And that's what all my examples are. I trade that majority of the time. I have traded other instruments. I have traded gold. I've traded on the ES. I've traded the NQ on occasion. But by and large, I'd say 95% of the times I trade commodities, I trade the CL. And there's a number of reasons why I do it. I've done that. I have a certain affinity toward the crude oil. I used to work in the oil fields, as probably some of you may have known from what I've said in the past. I'm familiar with it. I also believe that crude oil acts as commodity. It is a commodity. It also acts as a currency for countries and for companies. It is really important from a economic standpoint, world economic standpoint. And so it's universal. Every country needs it. Every country uses it. And it has enough movement so that you can anticipate price movement. Some people call it volatile. I use the 800 tick chart. I don't find that it's overly volatile from that perspective. Yes, it does move rapidly if there's news one way or the other, but it fits my personality. I like it for that perspective. I compare a lot of individuals trade the ES, and as a result, the ES is I like to compare that to a ship. It turns very slowly. It's it respects levels very well, like the CL, and the CL is more like a speedboat. It is more hands-on, and I prefer that. So that's my kind of the brief overview. I use the 800 tick chart exclusively. I use NinjaTrader as my platform for trading. I use CQG as my data feed. So that's all it works. Anyways, that's just the basics. So any of the examples I show are off of that. If you try to use a different type of volume charts, or if you're using 500 tick charts or smaller charts or larger charts, it may or may not, or have a different data feed. It may or may not line up exactly. I think that's I got the reason I went with the 800 tick chart is that it's, in my opinion, really closely mimics the 5-minute chart, which a lot of this was based on originally. But at the same time, I believe that I see that the tick charts themselves have really a volume component. And because of that, how they develop, how dynamically they develop on the chart, I feel it gives me a good feel with direction and so forth. So that's why I use the 800 tick chart. So hopefully that clears it up for some people that have looked at it. What I'm going to do today is I'm going to identify potential second entries. And now what the second entry is basically the market attempting to do something twice and then just doing the opposite. And so I'm going to use this on the 800 tick chart. As I go through this, I'm going to just go do a brief overview of the charts. That's the first thing I'm going to do. That's how I usually start out with, is identify second entries. Now, you can do this without channels and so forth. Oh, one other thing I should mention. I use the EMA 21. That's the exponential moving average 21 as a reference point as well. So that's it. It's 800 tick chart with the EMA 21. I use a 15 tick stop above resistance or below support. I'll get into that a little bit more, particularly with trading ranges. Markets run into two things. They're either trending or they're ranging. So they'll either move into a trend, they trend into a range, and they'll stay in a range and move out of that. Markets are usually trending or they're in a range. Markets trend 80% of the time, or the markets are ranging 80% of the time. They trend about 20% of the time. So that's just a general observation. You can take a look at it and go back. It's not really back tested. It's just general observation that I've made as far as trading this thing for a number of years. I looked at targets of plus 15 ticks. So I mean to take off contracts. So it's 15 tick stop, 15 tick target. I'm not saying that I don't trade in a chart for the purposes of introducing this slow hand method. This is what I use. Targets are a little bit further out. Sometimes the stop's a little larger depending on the context and observations as far as the market is concerned, or structure as some people refer to it. I look for double top, support, resistance of the trend channel with the EMA 21 as a reference, as I already mentioned. Stop limit or limit order on the signal bar, and I will describe that as we go a little bit more. We go further with that. And the entry is on the close of the signal bar. It will either be a stop limit order, or it'll either be a stop limit or a limit order on that signal bar. This will be clear as we go forward. So here's my support and resistance channels. As you can see, the first couple of swings off the highs and off the lows, kind of a best fit. I've got these short-term lines in here to recognize the channels. The arrow will show measured moves, which I'm not going to talk about today. We'll talk about that maybe in the later session. But again, look at those trend channels. Most of the time I draw these, the short-term trend channels, I double up the line just to kind of give them better visual reference. And I've done that on a few of the charts that I've got, particularly for today. And look at those other dotted lines are indicated areas of what I see as support and resistance. And the box is the target box, 15 ticks. Second entry to support and resistance. So as a result, what I've got here is that the ones I've got circled are the second entries. The stop would be below or above, either the short or the long, and with the target being toward the double bottom or the area of what I see as support or resistance. Just again, a visible reference. So if you look at it from the perspective of let's take a look at this first one here. You can see this. Okay, let's take a look here. If you see this for a second entry, you have this is the reverse count. The price came down to here. This is 0. This is the first entry right here. Here's the second entry right here. It's a short. There's a little bit of overlap here, but you see you can short is my 15 tick stop box. It's got 15 ticks to get to the bottom here, and so that's a pretty good example of a short. In this one right here, this is a second entry long. Okay, so we see that. Well, first of all, this is price makes a new high here. Here's the first entry, second entry long, below support, 15 ticks. Another 15 ticks to get close to where the double top is. I would say the double top is probably like close to here, but you see this is the previous high. Anyway, there's room to get out for both of these, and so that would be a second entry long. Here's another second entry short. First back here, and you can see the 15 tick stop. Your stop is above this, and this is just another example of second. So this is basically a range. So you have 0 for this particular trade for the short, 0. We have the first entry here, second entry short. Now you can count them off both sides, and that's something that we'll talk as we go forward. The more you see this, the more you pick this up. I can't emphasize this enough. Do the review at the end of the day. Look at the shorts, look at the areas, and the more that you look at it, more time you spend paying attention to this, the easier and the faster you can pick them up. The idea is that we study the charts in hindsight. By the time it comes to the time when you're doing it real time, it makes it a lot easier, far easier, because now you have an idea of how things. So let's take a look at what we got here, and I'll draw on the screen a little bit so you can see this versus for today, and a couple of things, just some of the things I showed today. Look at. All right. So right here we have what I marked here. Now I didn't delineate whether this was a good second entry or a poor second entry, because there's from a confluence standpoint or like other reasons to get in. But what I've done here is that these red ones, these off color ones, I don't know what color you call this, are second entry longs. Now you can count a second entry off both sides. And so as you can see, the first count is the high. So here's 0. Here's your first entry. And this right here at this point would be your potential second entry. Okay. Now, second entry long. Now, price came down to here. First entry pulls back. So here's your second entry long. Now, if you get in one tick above this, this failed. It's a failed second entry long. Fell off here. In this, is there a second entry short? Price makes a new low. 0 here. First entry, well, no, it makes another new low. There's no new low here. So, I mean, it has to pull back and then go in the other direction. So there's no second entry. So we only got 0, 1, and then this is higher than, this is lower than this low here. On this side, price, this is a new low right across here. Is there a new first entry here? No, the first entry is right here. But you have this overlap. First entry, pulls back, no second entry. All right. Price makes a new high. First entry, right here is a potential second entry, but it didn't fill. Now let's look at the low. 0. First entry short, pulls back. Here's your second entry short right here. Second entry. Okay. Now, the second entry short in this case, is this a good second entry? We're not going to really talk about that at this point in time. There's a reason. Look at this overlap. So there's indecision in this case. Anytime you have more than 2 bars side by side, you have to consider that overlap. And so if that's the case, whether or not you want to have a clearer idea whether to take that entry based on that. Now the trend is, at this point in time, it appears to be, this looks like to be a bit of a range here or here. A short-term range, or maybe just a larger range on both of this. From here to here is a larger range. But you can also see that we have lower highs here through this area. So it looks like the trend may be down. So the context from this perspective may be down. So you might be leaning more towards second entries on the short side than long. Price, so this is second entry. It's not a real good second entry here. Price makes a new low here. First entry, no second entry. First entry, the second entry looks short right here, but is that a good second entry? So you see 0, 1, 2. So I marked it. Okay. Is that a good second entry? Well, what's going for it? It's off this trend channel right here, this trend line. We have the EMA. It looks like it's heading down, but not a great bar. It's a doji. It's actually kind of a, now if you add these bars together, you still have a little bit of a tail. This is a better bar, but now look at where the bottom is. The bottom is right here. Does it give you the 15 ticks? Doesn't. So maybe you would pass on this particular trade, depending how strong the downtrend is. This is the second entry. Price makes a new low here. First entry, by a tick, or 2 ticks. This is one, looks like 1 tick. So this looks low. This looks like 2 ticks. This looks like 1 tick. This looks a little lower than this one. And here's your second entry right here. Now, you don't have a lot of room. It's going to make a new low, but as you can see, this one would have likely worked out. However, let's take a look at from the high side. This is 0. If the price makes a new high, here's your first entry. And down here, this is a second entry right there. I didn't mark this one. It gets a little bit messy, so I didn't really mark all these zeros. I wanted to give you a flavor of what it looks like as far as this charting is concerned. Price makes a new high. First entry on the high. Second entry right here. Okay, so this is second entry. But is there room to get out? Well, this looks like it worked out. But would you take a long off of this, or would you rather be more inclined to take the short? There really isn't anything here. Now, if you were so inclined and you took a trade here as a short, right here, for instance, just so happens, it was better trade, you took a trade. If you took this trade, you would probably be able to stay in, or you'd be carrying the runner all the way down to here, if this was slightly better set up. This one here is a bit of a doji, but again, you didn't have it to get to, this one would have also worked out, and you would be able to hold to somewhere in this neighborhood as far as a runner is concerned. Now we have a kind of a turnaround. Price made this pullback, went down to this point, and now it looks like this, we have it decidedly, it looks like there's a shift. It looks like a bit of a reversal. So this reversal is taking place right at this area right here. Price comes up, pulls back, and then starts moving its way up. So we have a couple of entries here. Makes a new high. First entry, here's a second entry long right here. Here's a second entry short right here. 0, 1, 2. Second entry short right here. Now we have a bit of an establishment of a new channel. So would you be looking long or short here? This is the second entry short. This is the second entry short. 0, 1, second entry short. New low here. 0, 1, second entry short. So this is lower than this one. So these are second entry shorts, but none of these worked out until this one. This one worked out because we had this pullback to this area. Now, as you can see, I hope you're getting a feeling for this, that you don't look at taking those second entries short or long until you have a target to work toward, unless, of course, it's just another leg. Hopefully it's making some sense. Now, let me just go quickly into today. I'll just swing this over. So here's a couple of examples. Now you hear about, this is just two examples. I'm just going to do this quickly for today. Here's my 15 tick stop right here. Okay, we've had, you can almost say that we've had a break of this line right here. So we had a break of this channel, pulls back, a new low, pretty strong turnaround bar. Looks like there's some support here, at least some hesitation here. If we use a 15 tick stop box, where does that put me? Puts me right down below this one right here. So that's within distance of where this low was, daily low was at the time. You think we're going to test this area, move up to this area? There's a double top right through here. Is the trend up? And are we going to look for another leg? I didn't talk about that. So you had a leg up here, you have a pullback. This is the first pullback, second pullback, and then we're going to have a leg up. At least it's up. Now, notice what happens when price gets to this. There's not enough momentum to take it all the way up. So you can see here's a double top here. We had this stick along. You almost say that's two legs back. First leg, second leg, pretty strong bar. And price moved to the other side of this channel. Okay, this is kind of a range. Now, at this point in time, you take a short here. Well, we move this to the top here after the bar forms. So your stop is above this top here. If it tops out, right this area, almost like a star, comes back, was going to retest this area right here. And as you can see, it did, and even move further down, reestablish a new trend. And this is the rest of the day, so you can see some of that. But this is two examples. This is more of a range, not really a trend. For people that are starting out, I would suggest that you look more toward this exercise right here. Second entries with the trend for the time being. Try to identify them as quickly as possible where you're going to, or even in the evening or after you finish. So for the day. So that's the introduction that I've got. Showed you a few examples from today. Showed you what you can look for and how they come about and what kind of mindset you should have going in. I've done this for so long now, I can pick these out very rapidly. For individuals just learning methods, it's going to take time. It will take months, perhaps, maybe even longer than that. But the idea is that not to throw over your old methods for this one, but to kind of incorporate it into your own price action trading, and hopefully you move closer to the ability of picking this out the way I see it. Anyways, hopefully this is helpful. Thanks for watching. I'll be on back tomorrow. Give out some other tips if you like. If you have any questions, please let me know. This is Vance. Bye for now.